Welcome to StockMarketFunding.com. I've got two different type of ETFs. The UltraShort is a S&P 500 short that you can get involved in. And here's another one called the PSHS short S&P 500. This one is a 2X down here. So basically when the S&P, and you get 2X means that you get 2 times your money when it goes up. Whereas the one above, as I recall, is 1X. It's just an UltraShort 500. So you can use two different instruments here to two different types of bear funds on the S&P 500. And I'm showing you here the ProShares short S&P 500. And up here I'm showing you the ProShares, also UltraShort, ULSHT for UltraShort S&P 500. Both are bear funds and ETFs. And when I take a look at the two of them right here in the video, you can see both instruments clearly. And you can see how oversold that we are. So when the S&P goes down, back in the day over here in 2008, they were $130. Well, they've dropped to $100 cents. And basically, we are setting up a pattern here that these can be traded in, can be traded. The 10-week is rising. That's bullish. The MACD is going in that direction on that one. So you can have two different types of ETFs that are related to shorting the S&P that you can invest in. And what I'm showing is the bear ones right now. In the next video, I'll show what the bulls look like. The bull funds versus these two bear funds. This one is around $52 down here, and you're going to get paid twice on this. Okay? So basically, we're going to be looking, now that we're coming up off the bottom here, on this particular fund, is that we went up toward the highs, we pulled back $4, and it's a bullish pattern set up on a weekly, because these are both weekly charts. And I just want people to know that when the S&P is going down, you can make money using these. You can buy options on some. Some are options tradable, some aren't. And there are two instruments that you can use, Ultra, and you can also use the ProShares 500. Let's take a look at how we had that long, deep pullback when the S&P went higher. This went down. We put in those highs, and we have pulled back, and we're setting to go higher here. The body is still closing above. The 10-week is ascending up. That's bullish. Over here on this particular other one, we also have a 10-week rising moving average, which is bullish, and it's slightly crossed above it. Now, as far as the volume goes, I can show you here that this level 2 right here, they bought $104 million on 54 million shares. I have a correction to make. The UltraShort, which is right here, had 54 million shares traded, $104 million money flow. This is the one that they like to go into. This one down here only had 3.5 million and $7.2 million money flow. So we're going to, over time, we're going to be looking at both of them. I just wanted to show the differences between the volume. This one's far more liquid, the UltraShort. So this is the one that we're going to look at trading. We'll keep monitoring this one, because if this goes up, this one's going up too. So basically, we use two different instruments right here to be short. Plus, you could be short the S&P index options. That would give you three different instruments to short the S&P 500, and then you could go long the S&P as a hedge above it. And basically, they're very, very, very good. I want you to know that the UltraShort, 54 million shares traded, $104 million, they were buying on it. Weekly chart is looking nice. So when the S&P falls, that's going to go up in value. versus this one here, which I'm showing you on the video, is that there's only 3.5 million and 7.2 million. And once again, it still has a bullish pattern. And they're headed in the right direction. They made their breakouts. They made their pullbacks. They're setting to go higher. So if the S&P 500, which is right here, breaks down, when this S&P 500 right here goes lower, you can make money. I just wanted to point out on the videotape the difference in the volume and the very two instruments as I've done. This one up here, the ultra short and the short S&P 500. There's the differences in the volumes. Both are set up greatly on the weekly.